What's going on, everyone in the private community? I hope you're having a great weekend, whether it be Sunday, Monday, or something in between, depending on where you are in the world. Hello, Stacey. Hello, Mike D. And I know Jas is joining us in a second because I was just chatting to him. So hello to those people and everyone else that's out there. Hope you had a good one. If you're from Melbourne, we can rejoice because you guys overseas won't know, but our football team won, guys. That's something I have not witnessed probably in my life. that team has been an abomination for a while. So congratulations to the long-term Melbourne supporters. Now, let's get into the market. So we're starting fake market futures green. We've got crypto up. We've got green city. So let's talk about where we've been, where we're going, and everything else. We've also got a bunch of stocks to be looking at that I think are basing. Heaps of stuff to go through there. So there's plenty to cover. And of course, your questions, bringing them through would be good as well. If you have questions about specific stocks, try always to find good structure zones, or if you have interesting questions, this is not super chat. It's obviously you guys are a private community. So if you have a good question, you want to ask it, feel free to put the full text in, and I'll try to answer it as best I can. So we have here the US 100. We know, of course, Monday is notorious for fake market futures, but we have that support of 15,200 being held up through the Friday session. If you pick this up an intraday trade, I think you made a very smart decision. Unfortunately, I wasn't able to Friday stream, but I think a lot of people would have been seeing this zone. This was a fantastic zone, and you can actually pick one of two ways to do it. I'll just quickly talk about scaling into this position. So let's say you want to buy 15.2. You see the previous support, you see the previous resistance, you know it's there. You could always take like a half position or a third position on the actual pullback, kind of try to catch that falling knife, tight stop loss, either underneath the swing or even underneath this kind of area here. And then the next position, what you could do is dial into the smaller timeframes, look for lightning bolt 5 minute, or wait for that engulf candle on the hour like you get here, scale in the rest, and then of course take it off on the close. A great intraday trade. Let's move on to what we've got here in the fake market futures. So we're above the previous resistance. Now, if we scroll out a little bit here, what does this mean? Well, technically it means that we're going towards that next level. We just hit 15.4, which I think in itself is a little bit of a psychological zone because it's 100 point. But this is kind of pointing towards, if this holds up in the market, I could see something like this occur in the futures. Pullback, previous resistance, support. For a 5 minute kind of change of trend, could be good intraday trade if it does go long here. And then we move into this resistance. Certainly a trade that could happen in the Monday session if you're not already in. We look towards that 15.5, probably conservatively, for the resistance. Now, if we get underneath, let's say this market just like tanks itself, doesn't give you a little kind of 1 minute, 5 minute change of trend here, and it goes back into this range, we need to be aware that if we end up getting a weak close off this, look at the QQQ. So the QQQ is the NASDAQ, obviously the ETF, 20 moving average daily. So let's say we have it up, because remember, we've got to be nimble and fast as traders. Then we open up and we quickly reverse that and create a shooting star style candle, or we create a reversal. If you're taking a short position because you see it back under this zone, you get lightning bolt backwards, something like that, take it back down into the previous support, which will be that 15,200 area. So there are quite a lot of different trade strategies. Obviously, we're showing both sides because guess what? They're both open. At the moment, it looks like the bull side's open. You know how to get that confirmation. It's all about confirmation. Those little nuanced bits of trade, waiting for the lightning bolt, waiting for the engulf, waiting for the different time frames to engage and then have that confidence. What we do know is we have a clear resistance. We have a clearly very accurate zone. We have another very accurate zone for the week. And if we get underneath this zone later on in the week for whatever reason, of course, market's generally optimistic, then we have our 14,800 full-on support being found as well. So there's plenty of good action here. Let's take a look at the weekly, and then we'll go to the SP 500. You guys know this is a very aggressive style candle, big bullish wick, fully off the base, just went bam, straight back in. Unfortunately, we had to turn, well, fortunately or unfortunately, we had to turn bullish last week once we hit that base so early. Then every single day, it was just pretty much chunking up. I hope a few of you got those nimble, fast trades. Nimble and fast is the aim of the game right now in trading. Indices is still one of the better. areas to be in, I feel. But we did hit the weekly 20 on the NASDAQ. So some people will look at this and say, well, that's as big a pullback as we've got and we're going to get. And from the statistics, you would think that's possible. If you're in investments, remember, you're basically holding the investment. So the different things, I've had a lot of questions about this. You have your investment account, and then you have your trade account. And then for some people, they may have like a gambler account. Now we're doing private mentoring. I'll be talking about this. Sorry about the writing here. But basically, if you have that tendency to have a little bit of a gambler and you have that in you, you need to separate it. And I mean, you need to separate it and fix the levels, because this can absolutely undo you. Remember, it's just trading is meant to be methodical, robotic, statistical style responses. Investing, you pick the highest quality conviction stocks, you long hold them, you buy the dip, you just make perfect sense. It's very basic strategy. Dollar cost averaging, pick key levels like the levels we already had focused out. And by the time it gets down here, you probably should be very heavily invested in your position. In fact, some people will even consider taking leverage. So say for me, I have a strategy where I'll pick some up here, I'll pick more up here, and if it does go down to this zone, I'll start to leverage in. Now, that's my risk tolerance, not necessarily yours, but you understand it's a different thing. That's the investment side. There's nothing wrong with leveraging your investments partially when you know what you're doing. And I'm not advocating that. I'm just saying if you know what you're doing and you do the course and you're, the ability to make sense of it, you can take the leverage in these kind of investment positions. And then you scale out as it comes back to all-time highs. You take small percentages off of the leverage and you look to deleverage. That's what a lot of big fund managers do. Hedge fund managers leverage in and deleverage, but they're always invested. That's big brain thinking for you. Obviously, trade at your own risk. Now, trading's different. We're looking for those minute kind of changes, day trading, scalping, and then, of course, swing trading. Swing trading's been crap recently in the indices because the swings aren't really working correctly. So we've moved to day trading, scalping. We know that it's being fast and being nimble. So I just wanted to quickly talk about this. Separate your accounts, separate your psychology. They are different things. And I don't want to hear people of closing off their full investments and stuff because they get scared of the market. If you have a conviction on a stock for 5 years, what is a pullback that's 5 or 6% going to make a difference to your long-term investment? Remember, there's trades and there's investments, different. All right, let's go to US 500 here and think about the pullback. So the pullback, again, weekly 20 was hit. Most likely zone for it to come down to. It's actually an incredibly strong style candle. Obviously, a bullish pin bar is a strong candle. We cannot ignore it. So for this to go weak here, it really needs to reject these bullish moves on Monday, because we go into the 2 hour. Let's take a look here at the futures market. You can see how important this zone is and then what we're coming up to. So we have here that previous support just got smashed and we're going straight into the 44.90. So I expect us to hit the 44.90 based on this current action, and this to actually be the catalyst level for all of the markets. So rather than just even looking at the NASDAQ, if you're waiting for the market to kind of go towards a resistance, this 44.90 is super key. And why is it key? Because the 44.90 is basically where, if they're going to slurp and suck out all of the calls here in the market, they're going to go for that 450 strike. And that's where they want everyone to start entering bull calls. Would I be putting in bull calls here? No, not without proper strat. Bull calls don't make sense to me here from a risk reward standpoint. Bull calls down here, sure. Bull calls here, dangerous. We know there's heaps at 450. So I expect the market, if it keeps opening up like this, to actually hit this 448 zone, find a little bit of resistance here, and this is where the sellers are going to come in. This is where the sellers come in. Samsung says, what do you mean by start leveraging in? I probably can't go into specifics because it is leverage. What you're doing is basically you might have, let's say, 100% of your cash invested, and then you can borrow on that cash, kind of like you do for a house, and you take small percentages. I don't want to tell people to do it, because the thing is, it's risky. You know, when you leverage, people over leverage. They go, oh, well, this is easy. I got it right twice. And they start taking 4-to-1 leverage risk on their investment portfolio. You will get smashed doing that. It's basically like just saying, hey, if I took my 100% and made it 120%, and I added that extra, like I basically had 100K and I borrowed 20K on it down the below, I'd be adding a little bit of extra to my portfolio with relatively small amount of risk. It's like taking a 3x long ETF, except that you won't be taking 3x, you're only taking a very small percentage. So yeah, the good thing is you can manage it, but you have to be more clear on what your plan is. And I think that it can be incredibly risky. So again, practice at your own disclosure, at your own thing, and do our courses, educate yourself, get more familiar with it, and make your own decisions on it. I have to be very clear there. 448. So we have the resistance. This is everything. This zone here is everything. I mean everything to the markets. If we close above here, don't even want to talk about being a bear. I'm serious, because that zone, do you guys agree? Imagine if it gets through that zone. What we're saying to the market is all of these calls that we've talked about, all of these option strikes sitting at the 450, 446 set for October don't necessarily mean anything, and they're going to let it through. Maybe there's puts somewhere that I'm not looking at, but for all these strike levels are possibly going to come in. For at least the short term, we have to just be bullish. We have to. And we still are optimistically bullish on these current charts. These strikes, if they're going to stop the market, stop it, it sounds like today, if they're going to stop it, because all of these strikes are going to get pumped by retail buying calls today. I would not do that personally, because I think that's stupid to buy calls here at this level. If you're buying calls, you buy it when other people don't. If you're buying spreads, I still don't think it makes sense on specifically the SPY. But yeah, this could be astronomical. If this increases, this 450 for this week, remember we're only at the start of this week. So by the 1st of October, we're going to see this. If we have a 450 strike going crazy on tomorrow's video, I'll be paying a lot of attention to that. Use the tools in the private community. Find the walls. Just like we found the wall with Tesla, find the giant walls. This is probably the best thing you can do. TR-OI is the code. And then your code, so say Tesla, TSLA, put in the month, the day, and the year. And you'll be able to get this in the manual entry area. So look at those walls. Absolutely. US 10-year, one to watch. I think this is pretty considerable. This basically has broken through our repair zone, bottomed off. It's moved up to the first point of resistance. And I could see the US 10-year coming down. But if it hits this level again, there's actually a trade here on the US 10-year this week. So this 1.37, this is a very strong resistance. Once, twice, 3, 4, plus a recovery, plus a 200, plus a 20 at the same time. The US 10-year should bounce off this area. Now, I'm surprised the NASDAQ is longing into the US 10-year bouncing, because this type of pattern, once you repair like this, I mean, this is a serious degradation. We know that when the 10-year was going up last time, it caused the NASDAQ to come down, mostly the NASDAQ growth stocks. So if the 10-year continues, and it looks like it's in set now for a little while to have some recovery, this could put downward pressure on the NASDAQ specifically. We've seen most of the money rolling into value stocks, not necessarily NASDAQ style stocks. So keep watching this one. Good trades potentially happening there as well. So lots and lots of stuff. US 500, 44.90, 44.90, 44.90. That's the zone you want to watch. And I just keep slamming that in because I think it's a really important area. We'll come back to stocks. I just want to quickly talk about the crypto markets. It looks like we've based. Now, I say that for a few reasons. We're about to close above this zone. The smaller timeframes are looking better. Base, big bull rejection. So that's 2 rejections. And we have a double bottom position. If you're looking at big bull this week, take a look at this zone. Imagine a closure above 45 on Bitcoin. Imagine what that means for the coin market. We've gone base in, base again. Don't worry about the China stuff. It's all FUD. We all know that they're going to ban it. They're going to do this. The fact is they ban a lot of things. And I went to China myself. I was using Google, just walking around using Google. It ain't hard to use things if you want to. Now, I know business is tougher there. There are ramifications for everything. And I understand this, but geez, that looks like a good chart. This is kind of like what Tyrone talks about a lot with the Adam Eve double bottoms, if anyone was there for it. It's not exactly that, but we basically have a double test of the level. Then we've tested it, created a double bottom in itself on the 2 hour, rejected that, closing above here in the future. So it's just started pumping here. And then we've got a 45K resistance that if it closes above there, it's going to smash all of the trend lines. I mean, all of the moving averages, and just looks so strong. And we go over to the other coins. This is the type of base formation we want. Look at Ethereum. Things are exciting here on the coin markets. Look at this. Look at the 20 and the 50. It's like if you saw this on a currency, on a stock, whatever, if it closes above these, 70% of your of the time, this is the solid thing. We have mostly a trend on the larger time frames coming in here. We've got a base, we've got rejection, 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 and we have two moving averages. We close above, what happens? Acts as dynamic support. So this is the type of thing, whether it's the pound yen, the gold, could be Snapchat, could be Square, could be the index, whatever. Especially if it was the index, and we close above there, wow, that's me sitting there with the honey. I got the hand in the honey pot, because especially on the index where we know it's optimistic, the hand is in the honey pot. It's very nice. Let's hope it closes above. ADA, similar type of thing. Actually, a weaker coin, but just hodling that 220 level. Trying to do a little double bottom base. 230 could be a little strike off there for it. It's actually weaker than the other ones, you'll notice. KSM, again, these alts weaker than the Bitcoin and the Ethereum. Look at the Ethereum and Bitcoin charts. See how they're better? Then the alts get worse. Now, obviously, some alts have done well, like the DeFi alts, but yeah, interesting stuff. Move over to IWM, 225. Just look for a break above that this week if you're looking for the long, and obviously 220 is the first support. I'm not a fan of trading it, but if you like it, they're the zones. We talked about it before. Move over to Tesla quickly here. Fantastic close for Tesla. Really strong close for Tesla. We've been bullish here on the channel. We saw the stupid puts everywhere that Wall Street was putting in. Let me just show you this. This is this week puts. Who are these people? Who is this? This is a put wall. Now, I've talked about why I love put walls. You don't want to use them as number one reason. This is not number one. This is like number 3 reason. Okay. And you'll learn this in the mentoring if you choose to do it. Obviously, I can't explain it completely in all these videos, but this is just to help your analysis. If you see a market going bullish and you see everyone buying puts against it and the price action's going bullish, what should that tell you about the market? A lot of people would say, well, shouldn't I be going bearish, Tom? Like, I'm scared. No, you got to get big brain. You got to reverse that, and you've got to think about it from the perspective of, if everyone's buying puts, they don't want to pay them off. So it's like think about Tesla for years. It was the most heavily shorted big stock out there. There were puts all over it, and what did it do? And it just kept going up. In fact, it never even showed a downtrend on the price action. There was a couple of crash points, but overall, the price action was phenomenal, and there were puts all over it. And when the puts reduced, it crashed. Markets tend not to crash when there's tons of puts. Go back, do your seasonal studies. You want to check 2011, 2010, 2012, 13, 14, 15, 16, 17. I even fell into the trap in the early days of thinking, oh, there's so many people going bearish, I should be bearish. The thing is that everyone had a massive amount of hedges on the portfolio because the global financial crisis was in their mind. It was really, they were scared. Oil is on a rip. Yeah, let's take a look at oil. We'll go back over the stocks in just a second. So we'll come back here. I want to just quickly talk about Snap before we go to oil. So this is one that we got last week. Fantastic. Great work. $83. We take the distance here. We extrapolate it out for Snap. And we've still got that 88. Now, do I want to take this into earnings? Personally, no. Earnings is in 30 days. Would I want to take Snap into earnings? Absolutely not. But this is a great strategy. If you've done the options course and you're going to learn about all these strategies, this is a fantastic level to be making credit. This credit here for a while now from Snap has been very phenomenal credit loan. And then, of course, there's spread opportunities up here, especially looking for the distance of this channel. And then, of course, there's a traditional buy. So many different ways to make money from this particular chart. A fantastic one. The real trigger here was watching this happen. So was watching again, long leg doji, bullish candle. What do we know? Decision made, begin the scale, continue the scale, more money. Fantastic. Very good. If you miss it, who cares? On to the next one. Never feel like you've missed out on anything. You guys know there is an opportunity every day in every market. If you think, oh, how could I be so stupid? Oh, well, look at oil. People saying oil's on a rip. We talked about this. It's the same strategy we use all the time. Firstly, inverse head and shoulders, fantastic. Close above here. Pull back, 2 moving averages. Oh, oil's so good. We talked about this in the group mentoring we're doing at the moment. I know a few of you guys have been bullish on it. Shout out to you guys because you are doing smoking here. Probably took some off at 74. I don't blame you. Who cares? We took some off. That's exactly where you should take some off. Because you've hit 73 first, the chances are when it does a deeper pullback like this, when it does make that new peak, it does crack. We talked about scaling off. 77 next target for oil. After that, wouldn't have a clue. And if someone says, oh, Tom, where do you think oil's going to be in 2 months? I have absolutely no idea. Because we don't have a big enough pattern. We don't have a big enough trend. How would I know? I don't know where oil's going. Neither do you. None of us do. OPEC come in and stuff the whole thing. With oil, I never make a prediction. Why? Because it's just that short, sharp, fast. You don't want to hold oil barrels that long. It's very costly. So being short, sharp, and fast and getting these explosive moves is great. But we know that if we break above 77, well, then we're talking about $90. We're talking about articles coming out in the future for 100. And if we hit like an 86 or 90, and then everyone's talking about 100, I'll probably be scaling off again. But that has not happened yet. So oil, phenomenal. Well done. Congrats. Take a look at gold just quickly because I saw Warwick's in here. Warwick, I got to say, I'm not a huge fan of the gold at the moment. Bit of a sleeping kind of gold. I know if you're on the small time frames, you might be getting bullish here. Basing. Closed above. Might be a scale in if you like that kind of thing. Double bottoming here. It's not right, my kind of favorite type of trade, but yeah, there is something there if you like it into the session. DXY at the resistance, still stuffing around. And we will now go into our discussion and some stocks. So let me read the chat here because I was going crazy. Let's find out what you guys have to say. Brad's here, Craig's here, Samson, Warwick, Will Thigh. Thoughts on Barber? Sure, man. We'll do that now. And then we'll go through some of the stocks that I like. Where are we? Thoughts on Barber. Okay. Oh, Jesus. This chart, I keep looking at it and I keep saying the same thing. Don't catch falling knife. And I hate this stock right now. Look, it's getting towards unbelievably cheap on fundamentals. But remember, actually, I want the chat to answer this. Chat, community, what's the most important thing in stocks? And I'll give you a tip. It's actually not the fundamentals. What is the most important thing in stocks? And then we'll answer this. Craig Stickling says, your video from yesterday looking at the put walls was a light bulb moment for me. Question though, if price action shows the opposite of the put/call data, what do you normally do? Well, price action should be showing the opposite. I think what you're saying is okay, so with Tesla, you got puts sitting everywhere, let's say at 700, and you've got a weakening market. They can sometimes, Craig, they let it through to the keeper, as I say, which is like, just my random term. So effectively what happens is they're saying that they let things through. Let's take some examples. Sometimes there's so many calls or so many puts that it just pressures the market. They've got to let it through and it just pushes and it becomes explosive. Recent examples, Moderna, calls out of control. Everyone in the world was buying Moderna. It was nuts. It exploded. It overblown. The whole market exploded on it. It was crazy. Then we have another one, if you want to look at it, would be AMD. AMD had a huge amount of calls. I actually got that partially wrong, remember, because I said AMD should top about that 100, 102 in terms of that's where you were seeing a lot of calls action. There was huge amounts of strikes to pay off. And then all of a sudden, the flood from Wall Street bets and stock tweets, the explosion of comments went out of control. You'd have to close all your positions at that point because once they let it through and it closes above, it can be incredibly explosive because basically it's like hitting everyone's stop losses. And that's where that squeeze idea comes in. Effectively, all the people that are riding against it cover off. And when they're covering, they're like, oh, and then it spirals out of control. So in general, it's a good principle. It is not our number one. What was the price action on AMD telling us? Bullish. What was the call wall telling us? Bearish, because there were so many calls there. Price action supersedes the options. Get it? It's a confidence factor that we're using. So let's see if anyone answered this Barber thing right. Jassa says reputation like Microsoft. Kim Lim says sentiment. Brad B says moat. Moat's pretty good. But it's actually sentiment. Kim has it correct here. Sentiment or confidence is everything to a stock. Are the stocks in the US market worth what they're currently ratioed at? I'll give you the answer. No. Any of them worth it? Probably not. Actually, probably not. Sentiment is very strong. And as long as sentiment is maintained, they can go up. If sentiment improves, they can go up even more. Are they truly worth the ratios by any metric? I'll give you the answer. I don't believe so. I really don't believe so. However, that doesn't matter because what does my opinion matter? It doesn't. It's just sentiment. But if sentiment got hit, e.g. a global financial crisis, a meltdown, even if things were strong, still relatively strong, if sentiment is hit, you can get monster sell-offs. And you've seen that happen in hyper stocks where the sentiment went from really bullish to really bearish, and companies like T-Doc and others got obliterated 50%. So that's what's happening here on Barber. Sentiment is horrible. Big money managers are scared. Their clients are yelling at them. They're saying, why you have me in Barber? Why are you having me in Barber? What are you doing? I am losing my money. What are you doing? And they're having to pull. The sentiment is negative in these stocks. So unfortunately, I could see Barber going to like 130. Now, today, it might be up. Let's have a look here. Barber on, what exchange am I looking for here? 0.07. So still incredibly weak. I think it's too early, too close to tell in terms of Barber. If it rallies and you yell at me because I'm wrong, think about how many times it's rallied. And actually, the community here has been correct about not touching this thing. The last time we accidentally touched this was here. Would I touch it again based on everything we saw? Yes. We got stuffed by the government. There's nothing you can do about it. It's a fantastic buy opportunity right there. After that, unless you were shorting, there has not been an opportunity. That's the way I look at it. Bradley B says AMD 100 calls one of those. Yes, the explosion of massive amounts of calls was out of control. But again, the trend was up. So remember, price action dictates against the options. Price action is strong. All right. We have some questions here. Ray Lim says, Tom, is it okay to put spread for Apple at current level? Ooh. I mean, it's risked, but geez. I mean, you're basically at a little bit of a resistance support zone. What's the price action telling you? Like, say for a put spread, like where you would put spreads traditionally is, say, like you put a put spread under here. It's probably valid if you put enough time on it, because let's say the market does come through. You've got that backup, the backup trend line. It bounces off the trend line. You can put another put spread underneath that. It creates a lightning bolt. You can put a put spread under this. When you do the options course, you'll learn where to put spreads. Putting a put spread at the money here against that when the trend is actually starting to recover is probably going to, more likely get exercised. So yeah, I assume you mean credit. You're talking about credit, yeah? Are you debiting or crediting? These are all credit levels. So credit, credit, those kind of things. I don't know if I would do it, but you can look for price action. If you see reversals, then you can look for it. It's going to be one of those ones that needs to pay off well, though, if you want to do it. And it'll probably just be a 1-to-1. So Apple's right, support, resistance. It's weaker than the other markets, but yeah, not super. Yeah, go over to Square. Square obviously bottomed, came back down and picked it up. So if you liked it, then this was an okay zone to pick it up through Friday. I don't blame you. I think the indices have been easier than picking up some of these stocks, but it did bottom. Have a look at the 2 hour and we'll see it. There we go. See that? Amazon, another one that did bottom, hit that 34, broke through 3,400 plus, went down to 3,400 and then started bouncing. So an interesting stock. We've got some better ones than this in just a second. Another one that I'll be watching this week, just in case, Enphase above 161, something to watch out for. Warwick says, thanks for the gold, Tom. Did not expect you to look at it. I've already set my day out. I know, Warwick, you've been around a while. I know you know what's happening on gold, but yeah, it's good stuff. We have to have a quick look. Mike D, I've got to go. Thanks. Have a great day. No worries, man. No worries. All right. Let's go to my scanner here. I have scanned a few stocks just to quickly pull up some details. Let me just quickly grab it all. Where did I? Oh, God. I don't know where I put it. Oh, I might have deleted it accidentally. That was dumb of me, wasn't it? Oh, no, I got it. Here we go. Okay. ADSK. This is Autodesk. Actually done a little base. So crash or correction after bad earnings. It's based off now, which is what you usually see. And you'll notice it's closed above that base. So we'll just quickly show you the different time frames so you get a bit of an idea. 4 hour, see the double bottom. Daily, again, see the double bottom getting above. Starting to look fairly decent. You guys know it's like a scaling kind of concept here, but that certainly has double bottoms. I think you guys would agree with that. We'll go to the next one that I pulled up here. Some of these companies I don't know much about the fundamentals, but whatever. LRCX, LAM Research. An interesting one. Good resistance here. LAM Research 616. Resistance. Basing. Channel. Could be one to watch. I will add these into the community's checks. I'll start doing this for you guys. Some of the things I look at for the week ahead. All right. So, and then we've got ADSK. Okay. What else did I see? EPAM. It's all right. What else we got here? Square hit my level, or Square kind of started coming better. STX, Seagate Technology, one to watch. Seems like it's trying to base, get through 86. I'm actually looking at this more than anything else, though. See that? See that channel that's happened here recently? So looking for it to base, form, and get above. Probably won't happen early this week, but that's something that I'll be watching. So see what you're looking at. Looking for that recovery, guys. Another one was TTD, the trade desk. Great base formation. Some things to watch here. There are some problems, but overall, base formed, resistance retested. It's probably already had 2 trades on it if you missed this one, as in like 2 entries. You got your closure entry, you got your retest entry. Nice little double bottom. This is, again, the type of thing that I would look for in stock markets. Going that optimistic side, and profit would be about 80 bucks, 81 bucks. Very simple setups, guys. I'll add these in. TTD. Play them all different ways. Remember, you can create credit on these types of setups by putting things at the below, especially if you're not sure it's going to move up there or you think it might sideways action. You can create call spreads above to try to take better profit at a certain period of time in the future. You can take traditional positions. All sorts of opportunities are there for you. What else did we have here? Let me see if any of these others look any good. LRCX. Let's have a look at IBM. Yes, I said IBM. Holy moly. What a terrible stock this thing is. It's so marginal and it's such a weird stock. It is recovering. Let's take a look at the weekly. It's moved so poorly though. Yeah, stuff IBM. We don't want that. None of this IBM action. Let's have a look at EPAM. Incredible strength coming off this. Guess it is technically breaking for more strength. Not sure. It's hard to enter these trends when you know they're probably close to the end. Probably not one of my favorite setups, but that was showing. And other than that, that was pretty much my main ones that I just saw cap. And you don't need that many trades. So, yeah. Tom, can you please look at Redfin? Sure. RDFN. Does it make sense why a lot of these we like them? This is a very similar strategy. Very similar. Redfin doing exactly as we like. Let me see if I can get this trend line up. Oh, man. Double bottom into a potential recovery trend line. Nice. I could see why you're scaling into it potentially. You've got here great bullish hammer. Got a lightning bolt that's just occurred. You're looking for that trend line to get smashed. And if it does, there could be a longer term hold here. And these are the ones that when you see it recover through these types of trend lines and create this lightning bolt, then you're seeing real strength here. I'll be back in 1 second, guys. Just 1 second. Oh, actually, probably a minute. A minute. Sorry, guys. My wife's iPhone just got here. All right. Fantastic. So I like it. And these are the ones that you leave scales on for longer periods, because what a recovery trend line really is showing you is there could be a lot more in this type of thing, in this trade. I mean, we know where it's come from. We know what a recovery means. These are the type of investment lines you look for. Zillow is very sick. Let's have a look at Zillow. You mean it sucks? Yeah, it does. It does. But I've still got it on my watch list because eventually, let's say it does turn around. So right now, obviously, back on the support could get even worse. We've got our downward trend line. We've got the base formation here. Now, if we created base off, let's say this happened, scenario, base, close above. I would actually scale here, close above, take more, and then look to hold it. Redfin's a better chart than this. Tom, can you have a look at Tencent? Yes. The middle of nowhere land. That was super unfortunate. You actually got stuffed by the government again. It closed above looking bullish, and then they put a massive games reduction on everyone in there, all the children. That was terrible. Look, I'm not worried about Tencent in this range. If it depends what if you're trading or investing, but look, based rejection candle currently today going bullish. Let's hope it closes above that rejection candle. That will be a good sign for further strength. I don't really mind about Tencent. I have a small position in this. Tom, have you covered Neo? Not for a trade, though. It's just sitting there. I haven't covered Neo because it's, well, look, frankly, I don't really understand the stock that well. And also, it's one of these ones that's getting hit by the government. We don't need to understand it to trade it technically. It's around that base. But the risks have been pretty severe. And you can tell, like, I mean, Neo should be bulling while Tesla's going. And it's not, because the sentiment is terrible on this stock. Look for it to get above 37 before you really start to say, okay, I'm excited about it again. Sorry, Mike. It's just, look, the reality is it's on big support. But these stocks are losing sentiment by the day. So they will turn around. They'll turn around when everyone hates them. And I think we're getting close to that point. But the government keeps coming in with more and more changes. If you want to trade these or invest in them, you need to understand how bad truly are some of the things they're doing. How bad are they for long-term growth? Because if they're not that bad and you can see through the narrative, because the narrative is the important part here, and I'm not doing the research on this, but if you can see through the narrative, then you could be getting some great value stocks. Absolutely. And when they will turn ferociously. I tend to just wait for the turn and wait for the price action to get better and then take smaller positions and scale as the news gets better. All right, let me see if I've answered all your questions. If you have other questions, ask them right now. Jessa says, Tom, is BTC not having a dead cat bounce? My indicators are showing no real money flow like I showed you. How many exchanges, though, is it taking into account when you're talking about money flow? This is kind of like a deregulated system. So you have to have all of the exchange volume coming through. Like I don't really pay too much attention to this volume down here. Dead cat bounce, remember, means a flash crash with a flash rally that then comes back down. This is a flash clash. There's the dead cat bounce, then it double dips. So a dead cat bounce generally is this into this. Then it goes straight back down. That part, this bit here is the dead cat bounce. That's the term for it. This looks more calculated to me in terms of the price action. You have rejections. Now, we're not out of the woods. We know that 45K is the zone. There's moving average city all over it. But that's rejection candles. If we close bullish here again today, that's the type of thing you look for. And you could say over here it didn't work out, but this is actually better looking candles than that. And I'm not going to change what I know works for me. So that's the type of thing that I look for. Here's the dead cat bounce. Bang, dead cat bounce, almost rallied to the peak. Came down, took out all the stop losses, creates a double bottom, and then rallies. Like it's happened time and time again. Bang, dead cat bounce, takes the low out. It will always take the low out if it's a good one, remember, because they're meant to steal everyone's money. Maximum pain theory. Double bottoms, rallies. That's what you're looking for in the stock market too. Okay, let's have a look at some of these. So we've got Kim saying zip looks good today. Can you zip it? Probably, Kim. I mean, yes, you can. Is that right? They advertise to me all the time. Oh, look at the maximum pain that they caused on everyone. Look at that. Oh, those sneaky cats. That's a stop hunt and a half. And that's probably why it's rallying. Wow. That's why I don't short, guys, very often in the market. You can short indices, but you got to be nimble and fast. In specific stocks, look at this. Closes below, gives a short signal, then bangs down, quickly reverses, and that's like fantastic. Just bang, bang. Imagine if that had actually engulfed this candle. You could have taken that long, long, long. Go the 4 hour. Look, it is looking better. I don't think it's like fantastic, but it's gone through the recovery trend line. And if you like it, you like it. Target, obviously, $8. Not too bad. JT Raj says, Tom, TA on QS and pen. Which pen? PENN. QS. Daily. Looks decent. This stock everyone was talking about last week. Is that correct? So resistance, 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 bit of a rejection, big volume last 3 days. I could see this coming down to like 25 and then bouncing off that zone. I would probably look for the conservative entry here if you like QS. It looks like one of those pumps coming in from like a Wall Street bets. Size 11.2 billion, so maybe it's earnings or something. Not earnings, some announcement. I just really like that 25-ish level. That's how I feel about it. Pen, Nasdaq, I assume. Could actually form a inverse head and shoulders here. Left shoulder, head. Get a little bit more problems here on the 4 hour. And crack through. What is this? 77.50. I'd look for a break above 77.50. Go the daily. Yeah, got to get through all these moving averages. So you get a closure like here. Yeah, looks a lot better. Great support resistance becomes support. So support, resistance, good buyer demands. Went a little bit too far for a lot of people. Took out their stops. And then it's reversing. Take a look at the weekly. Yeah, just need it above those levels. Good luck. Lou says, Tom, your course has really good indicators. There are seemingly hundreds of indicators. Yes, and they all mostly do the same thing. Are there ones not in the course you sometimes use? I guess VWAP if you're a scalper. Volume weighted is what you're looking at. So VWAP would be one. I think volume profile has its place, which I've started putting on the charts because everyone likes it. Volume profile, I'll probably make a video sounding how cool it is because people love it. But really, what it does, it helps just detail your key support resistance level. So, say like this one here with pen, it's only based on what you can currently see on the chart. But notice how there's a huge amount of volume profile here. And what you'll be able to notice is whether there's bullish or bearish intentions around that zone. And look at this. See how it's giving you, it's cut through the crap and giving you a great zone. Supports, resistances, supports. It gives you a very good, you don't need to be good finding support resistance zone. So yeah, volume profile I would use. VWAP would be something else. Raylim says ETH moving above 3,000. Yes, ETH is fantastic. If you go back over, I like it. AFRM, if you have time, firm holdings, sure. Very little data makes it tough. I don't think you can really TA this very well. It's mostly just key psychological points. Unfortunately, that's really all you got. You got like a 140 high. This is not really, it's trading, but it's more like investing in your basic fundamentals. You got a great breakout past 73, obviously gapped above. And you've got it pulling back to like a 2-hour 50. So you could use that. But in these cases, you're looking at key psychological zones and you're looking at a moving average to follow the trend and 2 steps forward, 1 step back. You can't really technically trade this very easily unless you're on the smaller time frames, okay? Because it doesn't have enough history on the left-hand side. And we don't even know whether it technically trades. Like it's worth $33.6 billion, but it hasn't been out long enough. So say like a stock like Apple, AAPL, huge amounts of traditional liquidity. That's going to be a tick. A stock in Australia that gets traded a lot, FMG, it's going to act technically. Let's give it a tick. If currency, if you trade the euro US dollar, it's going to act technically because the liquidity is there, a tick. If you trade some crazy currency that like Cross or a Mexican peso with a Norwegian kroner or something, that is maybe not going to act technically. It's going to act more fundamentally. So think about the liquidity in your tool before you necessarily trade it that technically. In a illiquid style, you're looking for key psychological levels, moving averages. It's a good tip for you guys. And basic trend, okay? Plus your fundamentals. In highly liquid environments, you're looking for patterns. You're looking for all the things we talk about all the time. These are all ticks. Over here, very little. That's actually, I haven't really answered that before, but yes. Tom, what confirmation do we need for ETH entry at this point? I think you could have already scaled because you had the double bottom on the smaller time frame. So here's the base. You could have already scaled here. And then you're looking for it to get above this zone up here. And then you take extra. So closure on like at least a 2-hour. Then you wait for higher timeframes to scale more in. So say the 2-hour closes, that's a tick. If the 8-hour closes, you add a little bit more. If the daily closes, you might add a little bit more. And then as it pulls back, you'll add more as well. It depends on the way you like to scale. But again, you can usually get all your position in and it saves you if the position goes fake false break and smashes down. Look for the patterns inside the patterns. This is the overall larger pattern with the double bottom in it. So yes, I do think some people will already be scaling here. 3,000 closure was a pretty big deal. And now we're looking for that 3,200. 3,200 will be in the next zone. Closure above that, you can keep scaling through at your own discretion and obviously make your own decisions. Ray Lim says, Tom, what's your view on the odd US dollar? It's near the 20 AMA. I'll have a quick look at the odd USD. Well, I think it recovered when it got through that. Obviously, that's a draw up I have for it. 20. I feel like it's trying to go long here, but it's all about the US dollar itself and what it chooses to do. Maybe look for a closure above this zone here and then take it into like a 74. Do I like the trade enough? Because see how important this zone is? I want this support, resistance to resistance to be smashed. And once that smashes, then we can rotate to 74. See how we did a bit of top down there and went through it? Yeah. Until that happens, not really interested in anything there. JT Raj says, next week, daylight savings. Heard you were going to do market closure. Hell yeah. I'm not doing market opens. Not at 1:30 in the morning, guys. I can't do it. It was killing me this year. And I'm not prepared to put my health at risk. I got sick more often because I was low. So, yeah, all closures. And guess what? That's where it's at anyway. Closure. That's where it's at. It's mostly where we do our positioning. It's way better. 24 hours of time would be awesome. Yeah, maybe one day we'll do a charity stream. I have talked about it for a while. In the future, we'll do that when we get a little bit more time. We're just trying to pump out this options course, hit all the scheduled deadlines. Remember, we released the first 2 sections. We're going to keep hitting that up. Tyron and I are working on it together. And then, of course, we've got the mentoring coming up, the group mentoring, so we can scale it correctly and give you guys the best value, which is awesome. We are closed now for October. That filled. So thank you so much, guys. If you're interested in November, please message Tyron and myself. Because they will fill up fairly quick based on the demand we're seeing. I think it's life-changing personally, but anyway, up to you what you would like to do. Samsung says we need Tom healthy. Yeah, just 1:30 is just killer. It's just so bad. You know, I don't mind doing it when it's 11:30, but 1:30, nah. Brad B, daylight savings changes. We go 12:30 and then we go to 1:30. So I'm just going to go start doing closures. JT Raj says, awesome, mate. Closure is health and wealth. Yeah, literally, I'm telling you right now, closure is where it's at. The whole shenanigans in the morning, you can often remember, think about how many times you've seen the market open up with the gap and you miss it because it's already happened through the futures market on stocks. Once you get closures above key resistances into the close, you can take the position there. And yes, you've got holding over you might be scared of holding over the market closure, but that's trading. I mean, in stocks, that's what happens. You've got to take away that risk and just say, okay, well, how many times is something terrible going to happen very irregularly? And you've got to have risk management for it. But the closure and then the next day it opens 2-3% up. You're like, hell yeah. That's where it's at. Has the market always been like that? Retail in the AM and big money in the close, or is that just recently? It's always been that way because retail gets excited. So it's kind of like in the morning, everyone's like hyped. They're like ready. It's always been that way, but there's also another reason, and it's generally margin calls get put in. Options, index expiries are different. So say like in Australia, we have our indices expiring in the morning on the Thursday session. So when the Thursday morning happens, there'll be manipulation into what we call the open. And you can tell this manipulation happens. You'll see it all the time. It'll rotate, it'll gravitate to the wrong zone and then fully reverse to the other area based on the options first tick. So yeah, the open can be manipulated. Obviously the close is manipulated. The amount of retail in the market right now means the first hour is often incredibly sneaky. So you'll see the first couple of minutes, what it will do, like say Friday, it's sold off, if you noticed, because I was watching it, but I just wasn't streaming it. It's sold off, hit support on the NAS. So I'll show you the NAS. Let's go down to the 1 hour chart. So it hit that massive 15.2 level. Everyone thought bears were probably coming through. And you could tell because guess what? The put call ratio went up that day. So people were opening puts all the way through that first couple of first couple of minutes of the session, that it hits the previous resistance, which acts as support again, bounces off it and traps everyone. So that full reversal, how many times have we seen that reversal play out recently? Here's a reversal that I know happened in the open. Went short, fully reversed, You got a movement above here, bang, straight that into the resistance. Fantastic trade. That's a stop hunt. That is an absolute stop hunt, or a trap, as you would call it. We had heaps of traps here. Open strong, reverse, open strong, reverse, open strong, timeless amounts of open strong. Open weak. This was an open weak. Bullish hammer, follow through. Great trade. Fantastic trade here. That puts a smile on my dial, that one. Jassa says, egomaniac, egomaniac, what do you mean? Could you look at the NASDAQ now? Will it stay at this level now? I don't know. How do we know where it's going to stay? I mean, what I would, if I was predicting things, which I'm not going to, like, it's just, this is a guess, man. Then you would think you come down to this zone here for the open, but we've seen markets open in the middle. It's a complete guess. The most likely scenario, if this was the real market right now and we had a closure above this resistance, the most likely scenario is 15.5 if it was the real market. If we get the real market open and we're sitting like at this level, then I could see like bang, 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 15.5. And if it fully reverses and you end up getting like a rejection like this, then we just go short. It's when you're scalping and you're making day trading decisions, you have to be in front of the charts. Day trading's time intensive. I don't do it as much anymore because you can burn out doing it. It's tough, I've done it for years. It's tough. Day trading, you actually want to watch the open session, but what you're looking for is the hunt. Friday's hunt. The hunt before. You're looking for the hunt, and when you see the hunt, you take the reversal with Wall Street. So when they hunt retail, you're looking for the hunt. We do this in mentoring. The hunt is everything. That's why the open is good to trade. The open is good to trade indices and some stocks, but specifically most stocks are good to trade on the close because you get those closes above key resistances and stuff. That's better for swing. So swing, you want to be trading the close. And day trading, scalping, you want to trade the open a lot of the time because you don't want to really hold your day trades ideally into the close. And investment, generally also the close. No worries. Maybe I could become an egomaniac. It's possible. You've always got to stay humble on the YouTubes. I've talked to a few other YouTubers over the time, and I can tell you one thing. And someone told me this, and I'll tell it to you guys. Why not? It kind of changed the way I perceive life. It's really important to never forget where you came from. And I think like this is not a philosophical, like a scream where we talk about these things, but I think you've got to realize you got to stay humble. You got to stay obviously hungry, and everyone is equal. There's no reason for you to mistreat other people or anything like that. You know what I mean? Like a lot of people get arrogant and they say, oh, I hate this person and I do this and I won't talk to them. Or they see someone, they judge them straight away. Some of the richest people I know don't look rich. They look homeless. I'm not kidding you. I know one guy is really rich. He has like 3 teeth and he wears like a singlet round. A nice guy, awesome guy. He has many Ferraris and he looks like a bogan and he admits it. But the thing is, he's absolutely lovely fella. You would judge him on the street instantly. One of the richest people I know. Samsung says, what do you mean by the hunt? The stop hunts? Yes, that's correct. All the sentiment changes. So the stop hunts or sentiment changes. So say here, the market opened and went weak initially. So people were starting to short. Once it sucks in enough puts for the session, it then reverts very quickly. Generally, it happens in the first hour, creates this bullish hammer or pin bar. And once you see that follow through, you could scalp with that pin bar up to the next point of resistance, which in this case was 15.2. On the Friday session, it was pull back to this zone, then engulf back bullish. So when that happened, it started selling off quickly there. US 10-year yield was spiking. The NASDAQ went down. Then suddenly we get that reverse, and the rest is history. Ray Lim says, Tom, to check for the Chinese market at current levels, is it better for a long-term investment? Oh, I don't know. This global, I would have said a few years ago, I bought this. I bought this particular fund. I liked their fund. And I bought a lot down here. Yeah. And I canned all of it last year because it was so strong into the pandemic. I mean, you can see how strong it was. I got literally rid of everything. It was 100%. It's very good for 2019. I don't say it's bad. I think it was excellent fund. I still think this fund is okay. It's basically not a lot of the weird things in China. Look, I'm hearing mixed reports in China. I'm hearing there is debt problems outside of Evergrande. There's a lot of really big companies struggling to do business over there. There's a huge crunch. We've got deglobalization. Overall, you would say that this market is a better longer term investment, you would think. But the problem is realistically the regulation and the government. I've always had a motto. I don't trade what we call pegged currencies due to what I've seen in the past. And I don't like to trade these types of things, even invest in them, when I feel like I can get a very similar result out of other markets because they're manipulated to not really be pro market. So, say in this country, property is pro, okay, or it has been pro. If you go to Australia, property is pro, even over the stock market. If you go to America, I would argue that the stock market is pro over property. Americans out there, if you're with us right now, would you agree? I mean, the property market is strong in America, but land tax, etc., keeps it down. So you've got like stock market is where people have the money. You know, the US market's the best for that reason. It's pro market, whereas it's slightly less pro houses. You go to Canada, it's a little bit more pro houses than it is pro stock market. So that's how I look at it. Bradley B says China's trying to get rid of capitalism in their country, so stocks are sketchy. Yeah, it's like if you're willing to risk it and you think there's like 100% there for you over time, then maybe you put a portion in there, but you've got to make that decision. It's tough, very tough call. Bradley B says in Austin, you have all the tech guys in basketball sorts, flip flops, a tank top, and then hop into their Ferrari. Yeah, absolutely. Durgesh says, hi, Tom. Can you please take a look at TLT? Sure. TLT. Another reason why, we were kind of surprised here at the bullish intentions of the market or how fast it flipped was TLT getting tanked. Look at that weekly. Nasty. That was a good technical too. Buy, another buy. Didn't quite really clear that 152 and went negative. It's on support right now, but I'm neutralized into it. I wouldn't take a trade either way here. It's on the support. If it's going to bounce, it's got to bounce right around here. Yeah, Durgesh, it's not really doing anything in particular. Just kind of sitting on the support. Nasty week for it, but we've talked about the market here. It's fighting with the bulls and the bears. The QQQ shows that. All right, guys. So we've covered off some good stocks. Go back and rewatch this if you'd like to. Is there any other stocks that I think are fantastic? Let's have a quick look at PLTR. That's back above the 2730. So this is starting to rally again. If the market rallies, expect PLTR to continue its bullishness into 30 and probably smash 30 based on the pullback that's already occurred. Obviously a risky stock. PayPal's getting back into some resemblance of trying to get back up. Hopefully it does. Z or Zoom still too low. Is there anything else that we went through some stocks I liked before? Some of the ones down here, just to quickly recap, we got LRCX at resistance, looking for a breakout above. We've got ADSK breaking after the bad news. It's created a double bottom, smaller time frame. TTD getting through all the moving averages, double bottom. Fantastic stuff. End phase, looking for a 161. Otherwise, meh. Yeah. Look to the FANG. The FANG will be what we watch this week and the crypto markets. FX Russ says, morning all. What time DST move will we start the webinars? Oh, that's a good question. Well, it's always going to be the webinars during Wednesday are always 9 p.m. AEST. So they're going to be pretty hard to hit for America. But we record them, so they'll be up immediately afterwards. You can just watch them on YouTube straight away. So they're always there. So if you miss it, remember the whole point of this community is we know we've got a 24-hour China channel with everyone around the world. It's there for you instantly. As soon as we finish this, you can watch it. Tom, have you talked about BHP? I haven't talked about the Australian stocks. No, not much. BHP, I feel like it's in a very nice base here. We talked about this zone. We talked about credit spreading and credit creations here. Yeah, I like iron ore around here. It's actually a falling knife, but there are strategies around it. Rio is very similar. Oh, wrong Rio. Hits the second support and starts bouncing. I think Rio has been my stronger pick over BHP. The whole split thing with BHP keeps it down. So they're moving obviously to Woodside. It's disaster, but anyway. JT Raj, Tom, my option knowledge is close to zero. Does options course for beginners? Absolutely. It takes you through from beginner to intermediate to advanced. It's incredibly well explained. We spend a long time trying to explain it so anyone can understand it. And more importantly, that you can apply all of your previous knowledge of technicals into the option strategy. It all links together, guys. It's actually harder to create curriculum than we thought because you've got to create university style curriculum. It can't just be a fly by night crappy course like everyone else has. It has to be structured in such a way that makes sense. Otherwise, it's pointless. What are you paying for? You have to pay for structure. And that's why if you look at the technical analysis masterclass, which has become the ultimate masterclass, the whole thing is structured together to be step by step by step to test your knowledge. And we're going to just keep adding to it. So yeah, it absolutely takes you from zero to hero. All right, guys. Oh, and by the way, if you want the options course, take it now because it is selling fairly quickly. And as we said, we want to support you guys with a room in our website that'll be for options questions. So we get pinged by them, and then we can come in and go through it. It's not. We need to be there holding hands a little bit. You know what I mean? As a community. Ray Lim says, Tom, thank you and have a great day. No worries, man. You guys have a great week. Have a great session. And just be careful out there. Still a little bit of, randomness going on. Pick your stocks, pick your specific positions. We know, here's a great example of a really solid kind of pickup level, which we talked about on NVIDIA. You guys can spot these. You know what's up. We're not bullish. We get bullish. We take it into the gap. We're not greedy. We scale it off and we move on to the next trade. Okay? That's what you're doing. You're being short, sharp, nimble, and fast. And ideally, if you're taking trade positions for longer periods, e.g. your Tesla, and this is more of a swing trade here, then hopefully you're getting rewarded. And where does Tesla go from here? Oh my goodness. Now that it's through, geez, the hype really could begin. What do you guys think? I feel like it could go all the way to like 900. Just because I know when the community gets hyped, it gets hyped. Either or, I'm just going to keep bringing out this trend line into the future. I'll leave that on the charts in the future. Stacey says, thanks, Tom, Sam, Sun, JT Raj, Jassa, no worries, and Craig. Appreciate it. Thanks, guys. You got any feedback you want to go through in these sessions? This is the private hangout for you guys. It's different from what we do in the normal stream. It's more casual. It's more about finding specific positions and understanding better so that you can make better informed decisions. Congrats on oil traders as well. Fantastic stuff. Bye for now. See you tonight.